In this video, I'm going to share with you how I got funded over $800,000. Hey traders, welcome back to the channel. If you're new here, my name's Liam, and I've been trading, investing, and coaching within the financial markets for the last 8 years. In that time, I've helped hundreds of traders get funded and become consistently profitable. So I'm a mathematics and finance graduate turned trader. And so I just want to share with you everything that I've learned along the way. And that's why in this video, I really want to share with you how to get funded. And I want to be honest, there's no guarantee that this will work for you, but it has worked for me and it's worked for many of my members. And so I think it can work for you too. And so I guess the first thing that we need to do is we need to define funding. Like, what is getting funded? And this is really where a prop firm provides the funding capital in a simulated environment. So no, you're not trading real prop firm capital. The environment that you're trading is completely simulated, but you do have to pass certain rules and procedures in order to get access to this funding capital. And generically, there's so many different prop firms that have so many different rules, but in general, normally you have to pass a phase 1. This could be where you have to hit, say, a 10% profit target, and then you have to pass phase 2, which is often a 5% profit target. No matter what prop firm you're trading, the system and strategy that I provide in this video is suitable for all prop firms. And how do prop firms make their money, right? If it's a simulated environment, what you have to understand is that 90% of traders are failing these prop firm challenges. And it's something shocking, like I think it's around 1% actually receive a payout from the prop firms. So, if 100 people take a challenge, like only one person will actually go on to pass phase 2, and only one person will actually receive a payout from the prop firms. And so that's why in this space where essentially the probabilities are stacked against you, I think I can provide an enormous amount of value in terms of trading a mechanical rules-based trading system that is actually designed to pass prop firm challenges. And so with that being said, let's dive in. So now I'm going to break down my proven strategy that is backed up by real quantitative data. This is a fully mechanical rules-based trading system, and so there's no room for subjectivity here. There's no room for any guesswork. Either the strategy presents and it sets up, or you've got no trade and, that's okay. Okay, so the first thing that we need is a daily directional bias. And this is honestly where so many traders are going wrong. And what this does is it acts as a market regime. And all this simply means is, do we have a long bias today? Do we have a short bias today? Or do we have no bias at all in the market? So this basically just acts as a objective filter in order for us to simplify, are we bullish? Are we bearish? Or do we have no bias in the market? And the reason why this is the most important is because so many traders leave their directional bias down to subjectivity. And this means that, they're using subjective forms. They're using forms of, it might be, say, a 4-hour order block, a 4-hour fair value gap, support and resistance, which are drawn and which also can be very, very subjective. And so with me coming from a mathematics and finance background where data is super, super important to me, whenever you can fix a variable, this is absolutely vital because this allows you to go, okay, under this market regime, when we are bullish, and once you do all of your testing and your back testing and everything, that under certain market conditions, you have a certain edge in the market. And so yes, you can see EMAs on my chart. And the first reaction that I normally get is, oh my God, you're using EMAs, right? Like you might be using ICT concepts, but how on earth are you using EMAs, right? Like they just don't work. And I cannot disagree any more than that. And so you can probably see that we have EMAs on my chart right here. And so what you can see is we have the 50 exponential moving average, this is in green, the 100 exponential moving average, and the 200 exponential moving average. And I initially get quite a lot of pushback from this because traders are like, there's no way that these EMAs work in the markets. And, the first pushback is, these are lagging indicators or whatever. But what I'm here to tell you is this gives us a objective, systematic way in order to identify, are we bullish today? Are we bearish today? Or do we have no bias in this market? And so, for example, when the 50 EMA is greater than the 100, which is greater than the 200, this indicates that we are long bias on this market, right? So, i.e., we are trending to the upside. And so it is only logical to be looking for buy positions in this market. If you're looking for sell positions, essentially you're going counter trend in this market. And statistically, when you're trading a trend continuation system, which is what we're doing today, you're going to make so much more money trading with the trend than going counter trend or trading against the trend. And so what this allows us to do, so within 10 seconds, we can objectively say we're bullish in this market right now. And so, during the London session or during the New York session, I am only going to be looking for long positions in this market. And this also helps prevent a huge problem that traders are facing, which is over trading, which is flip-flopping. 1 minute you're long, 1 minute you're short, and then you look back at your P&L at the end of the day and you're like, bloody hell, like I've took 15 trades. 1 minute I was long, 1 minute I was short, and this just kept this flip-flopping. I was profitable at one point and I've just gave back all of my gains. And so what you find with something like this is, you may only have 1 or 2 setups per day. And this really helps prevent you from over trading, which I think is absolutely crucial. Okay, cool. So this is, number 1, super important, which is identifying our market regime, right? Number 2 is identifying a level to trade from. Just because we're bullish in the market doesn't mean that we can just jump long in this market, right? We need to see a form of level. We need to have an area that we want to see. And if price comes to that level or that area, then we can look for a potential long position in this market. And this is also where a lot of traders go wrong because they have a lot of subjective ways to identify key levels in the market. How do you identify support and resistance? Super, super subjective, right? But if we take this approach, this will take all of the guesswork out of it. And so in terms of identifying key levels in an objective and systematic way, what I like to use are session indicators. So right here, we have the Asia session. This is from 7 p.m. until 12 o'clock midnight. The London session, which is from 3 a.m. until 5 a.m. And we have the New York session, which is from 8 a.m. until 10:30 a.m. Eastern, right? This is all New York time. And many traders have slightly different variations of, what sessions they want to trade, and slightly different maybe variations of what times they want to trade, and slightly different variations of their session timings. So what you can see is we have the Asia session from 7 p.m. until 12 o'clock midnight, the London session from 3 a.m. until 5 a.m., and the New York session from 8 a.m. until 10:30 a.m. Eastern. And many traders may have slight different variations of their session timings, but what I can say is this is pretty much universal across the board. And the reason why is because most of the volume is coming in the London session between 3 a.m. and 5 a.m. And most of the volume coming in the New York session is between 8 a.m. and 10:30 a.m. Eastern. We're not really bothered too much about the Asia session. We're not looking at trading the Asia session. But this session timing right here, 7 p.m. until 12 o'clock midnight, is what has worked very, very well for me. And this worked very well within my backtesting data as well. Okay, so how do we identify like an actual key level that we need to trade from? Because we understand right here we're long bias in the market, but we know that we can't just go blindly longing the market. We're going to need to see certain rules and levels and everything stack up before we can actually take a trade. And so if we are long bias in the market, like this example right here, what I always do is I mark on the previous session's lows. We're not really interested in the previous session's highs because this isn't really going to allow us to take a trade in the market. And so what I do every single day when I turn up to the markets is I mark on the previous session, so the London session low, and I mark on the session before that, which is the Asia session low. And so these are the levels of interest, right? You could call this our points of interest. This is really where we're looking for price to come below, and then we can look for a potential long trade in this market. You know, whether we come below the London session low, I don't know how deep this retracement is going to be, or whether we have a very aggressive sell-off and come below the Asia session, we can then still look for a potential long trade in this market, as long as the EMAs are still indicating long bias in this market. So how would they do that? Well, if they're still in order, right? If the 50 is greater than the 100, which is greater than the 200, as long, at the exact time of confirmation, as long as they are in order, then I will be longing this market. And so if you're trading the New York session, essentially you have two potential scenarios, right? Scenario one would be a sweep of the London session low. This is just where price comes below, deviates this level, and then we could look for a continuation higher. Or scenario number two, which would be if we sweep the Asia session low, then we could look for a continuation higher. No trade, either trade, there's no higher probability. Based on my back testing and based on my data, these trades that we're going to look at, whether scenario 1 or 2 plays out, they pretty much have the same probability of success, right? And so think of this as, when or how are we going to get a discount in the market? Because think about it, right? If we're trend continuation, we're looking for higher prices in the market, we want to ensure as a trader that we are getting a discount in the market. We're getting a discount for this trend, right? We don't want to be buying when price is all the way up here and, we're expecting what higher prices. Well, at that point, the probability is going to be a lot lower for the continuation, right? Because these buyers that were buying down here, they're going to be exiting up here. So it's very important that when we are buying in this market, we're buying at discount. We're getting value, right? That is absolutely crucial. Okay, so now I'm just going to play out the New York session. And what I'm going to do is actually share with you the trade plan that was sent ahead of time to all of my exclusive members, just to show you that, I'm not cherry picking this trade, and that what I am showing, teaching, and sharing is actually what I am trading in real time, right? This is literally a trade that I took yesterday, because there's a lot of people on here that are sharing things that, they're just cherry picking, right? They're not actually executing in front of hundreds of people. And really what they don't have is they don't have their balls on the line, right? They're not owning their trading system. One day they're trading one system, another day they may be trading another system, and they just don't have their kahunas on the line. And so pretty much every trade that I've shared on this channel since starting this channel is a trade that I've personally took in real time with all of my members as well. And I think that is absolutely vital. You could probably tell just by really the tone in my voice and really in the conviction that, what I am telling you and what I'm teaching you is something that I am genuinely executing on a daily basis. And so we're looking for this raid of sell-side liquidity. And as you can see, this occurs during the New York session. So whether we just wick below this level or whether we get a body close below this level, it doesn't matter to me. Right, we're looking at a 15-minute time frame. There's not really a huge significance or weighting on this. Yes, if you're trading, the daily time frame, then closures are a lot more, they have a lot more weighting to them. And this sort of system, which is a one time frame system, it doesn't really matter. Now that we've seen a raid of sell side liquidity, the next thing that we need to see and we need to wait for is a actual confirmation in the market. And again, this is where so many traders overcomplicate their trading, where they're looking for all of these entry schematics and variables and all of these different complex entry models. But what if I told you that you can just wait for a 15-minute bullish confirmation? And this is enough. This is enough to show that momentum is stepping into this market. And this is enough to show you that, okay, buyers are taking control here. The reason why, again, this is so significant is because this is occurring during a New York kill zone between 8 a.m. and 10:30 a.m. Eastern. Right? This is when we're expecting trend continuations. This is when we're expecting volume to come into the market. If we've seen this confirmation, during the Asia session, this hasn't got much weighting, right? But when you understand intraday volatility and intraday trend continuations, which just basically means simply like, when is the market trending? Well, I can assure you that if you look and backtest intraday seasonality, it's during these kill zones. And so it doesn't really make sense for us to be looking at price outside of these sort of pockets of windows or this time of opportunity. And yes, sometimes it's going to trend outside of this window, but we're looking at probabilities. And when we look at this over the long term, we know that it's during these windows when the market likes to trend. Okay, and so my entry was on the break of this candle high. And if we just zoom in here, what I do is I account for a little bit of spread above this candle high, normally about 0.5 points. And then what I do is I have an invalidation at the liquidity sweep low. And then what I do again is I like to account for some spread in the market. You can see this is 6 points down to the low. And so what I like to do is just make this 6.5. Give it a little bit of breathing room, just in case price wants to come down, grab some more orders, maybe make an equal low, which is, very, very rare. But if it does happen, then at least you're covered and you have a sort of buffer at the bottom of your trade. Because the last thing that you would want is for price to come down. You're stopped out because of spreads in the market. And then what happens? Price continues in your intended direction. The next thing that I always do is I target a repeatable mechanical 1 to 2 risk to reward. We're not looking for a home run in the market. We're not looking for a 1 to 10. What we're looking for is a repeatable, small, bite-sized piece that we can take out of the market over and over again, right? Because we don't know if this trade is going to go to a 1 to 10. And, based on my data and my backtesting, it's actually extremely likely that that is not the outcome and that is not the probable outcome. What I can tell you is that the optimal and the probable outcome is around a 1 to 2 risk to reward, right? Anything less than that, it starts getting a little bit close to more of like a break-even system, right? If you're targeting like a 1 to 1. And anything hugely more than that, if you're targeting, say, like a 1 to 4, 1 to 5, you're not going to be hitting these trades very, very often. And so this 1 to 2 is kind of like a nice middle ground. Like, your wins are going to be twice the size of your losses. And, your wins are going to often make up for your losses. But with this system, like I have around a 40 to 50% win rate. And for a lot of people, they probably just switch off right now thinking, like that is not good enough. But I can assure you that anything more than a 33% win rate, you will make money over the long term with your trading system. Yes, you're going to have winning months, losing months, whatever. But over the long term, which is I hope why you're here, this is essentially what I like to call a robust trading system, which means that your edge is suitable over the long term during different market regimes, different market conditions, because all of our parameters are fixed. And, we don't really have many parameters, which is incredible in the first place. And so I was triggered long right here and we started pushing, pretty strongly into profit. And, not all trades are like this, right? Not all trades are going to just go straight to your take profit like this one right here. And, you can see within 30 minutes, this trade had hit take profit. And we had run all of this buy side liquidity that was resting above the London session high, right? Understand that there's going to be a lot of buy stops that are going to be resting above here. This is really breakout traders that are looking at getting long into the market. And there's also going to be a lot of stop losses, right? Any early sellers in this market, their stop losses are for sure, especially, intraday traders, they're going to be above here. And what do we know about trend continuation plays is that buy-side liquidity and these buy stops and stop losses are essentially like magnets in the market, right? So it's very likely that once we are triggered long, we're at least going to go up and run this buy-side liquidity right here. We don't know how high this is going to go, but we know that this is essentially like a magnet in price. As long as you have direction correct, which I know that I do based on the EMAs more often than not. And so this right here was a valid A+ setup. And I just again want to share with you execution proof that was shared with all of my exclusive members. And you can see we got quite a lot of continuation to the upside. And that is okay, guys. That is not our trading plan to be able to take like every single piece out of the market. And sometimes I found like some of these trades that I take, they go to like a 1 to 10. But that is not our system. That is not our trading plan. So you're never really going to feel FOMO or fear of missing out when, that is not my plan. My plan is not to take every piece out of the market. My plan is to take a bite-sized 2R out of the market, regroup, come back in the next session, and repeat that process over and over again, because that is where I have a statistical edge in the market. And so this right here is my fully mechanical rules-based trading system that I call Momentum Mastery. This system has allowed me to get funded over $800,000. And this system has allowed hundreds of traders and my members to get funded and become consistently profitable. Because what it's doing is it's taking all of the guesswork out of it. You're no longer relying on discretion. You're no longer relying on your emotions, how you feel, in order to make trading decisions. It's the rules and it's the system that essentially make my trading decisions for me. And then, once you're actually in a trade and you've executed, there's nothing I can do about it, right? I just adopt more of a set and forget style system. I'm triggered in, I've defined my risk. It is what it is, right? Like it's either going to stop me out or it's going to hit my take profit. There's no in between. There's no micromanaging. There's no real room for anybody to be getting emotional. Yes, I'm going to lose trades. Yes, I have around a 50% win rate with this trading system. Yes, I'm going to have losing months. Yes, I'm going to have amazing months. Yes, I'm going to have break-even months, right? But all I can do is really follow my rules-based trading system. And then it's up to the market really to decide, is this a profitable month, right? I cannot control any of that. But what I can control is my emotions, my plan, and my execution, right? Without that, then it's extremely hard to make it in this space. And yes, you may pass a challenge based on luck, based on gambling, but that is not why I'm here. That is not why I'm doing this, right? This is because I want you to succeed long-term in this trading space. And I want you to trade a proven system that is, not only backed up by data, but has essentially limited drawdown, right? So for example, this system, the most that I've really seen is around 7 or 8% drawdown with 1% risk, and so this is actually quite sustainable for anybody that wants to enter this space. And again, as I said, there's no guarantee that this will work for you, but it has worked for me. It's worked for many of my members. And so, hopefully if you implement a lot of the things that we've talked about today, it can also work for you as well. So as always, thanks so much for your time and support, and you take care, guys. Bye-bye.